From the financial centers of the world, this is Bloomberg Markets with Alix Steel and Guy Johnson.
Friday, the 26th of November. We're 30 minutes into a shortened Wall Street session. What do you need to know? Stocks certainly under pressure. They're sliding. Investors rocked by news of a new virus variant that has multiple mutations. That might make it more deadly than Delta. Banks, energy, travel all lead the selling. Rates are also repricing as traders push out potential hikes in the Fed and the Bank of England. The dollar is down. Crypto also being caught up in the selling. Bitcoin down circa 20% now from its recent highs. From London, I'm Guy Johnson. My co-host today in New York, Kaylee Lines. Alix Steel is off today. Welcome, everybody, to Bloomberg Markets. Kaylee's putting in something of a shift today. You may have seen her if you were up early first thing this morning. I can't remember how many hours she's been on air, but Kaylee, the sense so far, the market is shooting first and asking questions later.
Absolutely. You're seeing the knee-jerk reaction today, Guy. It was supposed to be an easy day. Black Friday, you just talk about shopping. You know, everybody's still relaxed from Thanksgiving. That is definitely not the case, unfortunately for me, and unfortunately for those invested in risk assets, because it has turned into a decisively red Friday. The S&P 500 right now is down 1.74%. We're at 4619. And within the S&P 500, of course, certain sectors getting hit harder, especially the travel complex, as we see restrictions coming into play from South Africa and its neighboring countries to places like the UK. So as a result, the S&P 500 Airlines Index is down 8% at this point. You are seeing some really dramatic action in the bond market as well, a re-rating of expectations for the Federal Reserve. That first rate hike now pushed out into September, and you're seeing that showing up in the short end of the curve. The two-year yield coming in 13 basis points. We are south of 51 basis points, and of course, it's showing up in oil as well. A lot of concern about what those travel restrictions may do to demand, and as a result, WTI crude down the better part of 8%. We are trading at $72.27 a barrel, Guy.
I haven't seen a 1% move for the S&P since the beginning of October. That has certainly changed today. Kelly, within the last few minutes, the European Centre for Disease Prevention and Control calling the new strain, quote, a variant of concern. This is people across the world are reading the headlines of this variant that has spread from South Africa, Botswana, up into Europe. We've got cases in Belgium now, one case in Belgium now. The World Health Organization saying they now need to get to work, and quickly.
It will take a few weeks for us to understand what impact this variant has. Researchers are working to understand more about the mutations and what they potentially mean for how transmissible or virulent this variant is, and how they may impact our diagnostics, therapeutics, and vaccines.
We're joined now by Sam Fazeli of Bloomberg Intelligence. Sam, we talked about this yesterday, and you gave me the number of mutations that are on the spike protein of this new variant, a huge number. But what we don't know yet is what are the implications of those mutations. The WHO thinks it could be a few weeks before we start to get that information. How quickly do you think we could learn about this? Because at the moment, the world is panicking.
Hi, Guy. So I think you have to think about it this way, that we've had several variants already. We've studied their mutations, in what areas of the spike protein they occur, and what that means for vaccine neutralization, antibody neutralization. So based on those that knowledge, you can try and estimate or get a feel for how immune evasive this new variant would be. And from that perspective, it could be at least as bad as beta or mu, possibly worse because there's even more mutations, as you said. And in terms of trying to understand when we'll get the data, remember what we have to do is to grow up the virus or create a virus that looks like it, and then test our antibodies and the bloods from vaccinated people. That just takes time.
Sam, in terms of transmissibility and then also how severe of the disease it causes, which of those is the more important information to get first?
And so both are important, obviously, but the first one, I think that we'll get, in fact, I think we'll get an answer to both questions relatively soon. It just takes a lot more data points for you to be able to be sure. And faster transmission is not easy to calculate, but we already know that Delta is a monster when it comes to transmission. And I think that you'll find that as the days go by and we can see that this virus is competing or not in different regions. We just can't rely on one region, such as just South Africa, because there's other elements in here. And then in terms of severe disease, we need to have enough cases to find out whether there's an increase in disease severity or numbers of people who have severe disease. This, unfortunately, is going to take a lot of time.
Sam, we've got a case in Belgium. Somebody arrived there, a female arrived there with this new variant. The UK is saying at the moment it hasn't sequenced any of the new variants. Would you expect, though, that this is already in Europe, that this is already starting or will start to make its presence felt? We're putting travel restrictions on, but do you think we're closing the stable door after the horse has bolted?
I think there's probably that's likely to be the case, Guy. As we have seen several times over now, there is no variant that hasn't escaped anywhere if it's able to do in terms of competing with Delta. Remember, Delta came and squashed and crushed everything else. So if we had introductions of the new variant into the UK or the beta variant in the UK, they just never had the opportunity to take over. Here, we will see whether this is able to compete with Delta. If it is, I think you'll probably start finding it everywhere. It's, given that the first sequence came out on the 11th of November, there's been a lot of airplanes coming in and out of Africa and wherever else the virus has got to. And of course, we have to be very careful not to label this from a region perspective. This virus comes and the variants arise anywhere. So we have to be respectful of that.
Obviously, Europe is already in the midst of a Delta surge. Parts of the U.S. are as well. If someone had a breakthrough Delta variant infection, would they, in theory, have enough immunity from that they wouldn't be infected by another variant? Is there a way to know that?
Wouldn't I love to know the answer to that question? Because I had Delta and I had a vaccination before. There is data. Unfortunately, it's not the answer you're probably looking for. There is data that suggests that if you were infected with Alpha or the Delta variant, your immune response is not very good at neutralizing the Beta variant. So that if this new virus, the variant, is similar in behavior to the Beta variant, then it's possible that those infected with Alpha or Delta, that immunity will not be that great. That was just one paper that I saw, and we have to obviously take that with a pinch of salt.
It always feels like there's more questions than answers with this thing. But Sam Fazeli, you always do have good answers for us. Thank you so much joining us from Bloomberg Intelligence. And as for how all of this translates into the market, fears are growing now that this new virus strain may spread more globally, and money markets are now offloading bets on central bank interest rate hikes in a hurry. Traders pushing back the timing of the first 25 basis point rate increase for the Fed to September from June. Joining us now with that part of the story is Bloomberg Intelligence's chief U.S. interest rate strategist, Ira Jersey. So, Ira, what do you make of this very decisive move today?
Yeah, so we have moved back. We still are pricing for most of a July hike. So even though the first full hike isn't priced till September, we're still priced for July. I think, importantly, and one of the things that the market's really looking at here is how additional lockdowns might affect the global economy broadly and inflation in particular. So when you look at the inflation swaps market, so what the market's pricing for inflation over the next year, we've come down a full 0.25% in inflation expectations for the next year, and that may come down further if we do get significantly more lockdowns, and that's going to be especially hard on some of the services sectors like leisure and hospitality, where you just started to see significant improvement. Now that improvement may be may be lacking, and that's going to just bring down inflation expectations even further.
Ira, how much of what we're seeing today in the rates market is just a reaction to the big move we're seeing in oil?
Well, that's non-trivial for sure, but I think all of these things can't be uncombined, right? So the fact that you're going to have lockdown just means you have people driving less. It means that you have less air traffic. All of these things have an effect on oil prices, and certainly that has then a knock-on effect on things like linker break-evens, which have come down a lot. But even the nominal moves. So when you look at just where 10-year Treasuries or where 10-year German yields have gone over the last couple of hours, you are looking at a general risk-off environment, right? Mm-hmm. Which is not a huge shock given that the stock market's down over 1.5% right now in terms of the S&P. So yeah, it's all a combined move, and I would expect policymakers, for example, to get a little bit more dovish next week. But what are they going to do, right? It's not like the Federal Reserve is going to turn around and stop tapering their asset purchases, but they might not accelerate them, right? Which is a slightly more hawkish tilt compared to the minutes that we only had 48 hours ago, right? So I think that this can change a lot of the narratives that you've been hearing about in the markets.
Those minutes feel like they were a month ago, Ira. Of course, we have to consider that it is Black Friday. It's a shortened trading day today. Liquidity is a factor. What is your best guess on how Monday goes? Yields to the up or downside?
Yeah, well, obviously, we don't know what the headlines are going to be over the weekend about the variant and about the government reaction to them. But I would expect for the Treasury market us to continue to rally a little bit and to see yields lower. I'm looking for the 10-year yield to at least test 1.45%, if not 1.38, which was the November low. And in these kind of dramatic moves, you do tend to get some volatility, but people would rather own less risky assets, at least until there's some clarity as to what the what the near-term future might look like, which obviously, like you just heard Sam, my colleague in Bloomberg Intelligence, talking about, it'll take a couple of weeks probably before we have any significant types of clarity about this variant and its potential dangers. So because of that, you're more likely to see more risk off as opposed to a big snapback in terms of yields.
Could be a bumpy couple of weeks. Ira, always appreciate the input. Thank you very much indeed. Bloomberg Intelligence's Ira Jersey on the rate story. Coming up, the new variant certainly rocking the markets today. You've got the S&P now down by circa 2%. Julie Beal, Kane Anderson-Rudnick, portfolio manager, joining us next to give us her take this Black Friday. Or is it Red Friday? We'll find out next. This is Bloomberg.
First of all, you want to find out if, in fact, it does evade the vaccines that we're doing. I mean, there's always the possibility of doing what the UK has done, namely block travel from South Africa and related countries. We don't know that. That's certainly something you think about and get prepared to do. You're prepared to do everything you need to do to protect the American public, but you want to make sure there's a basis for doing that, and that's what we're doing right now.
Dr. Fauci speaking to CNN a little bit earlier on today. We just don't know at this point so many of the answers to the questions we have. The new COVID variant certainly putting a massive dent, though, in global markets. Doesn't feel that dissimilar to the early 2020 story. But this time round, we've been through this kind of cycle a few times. We're at least getting used to it. But nevertheless, the instinct to shoot first and ask questions later, still very much there. Abigail Doolittle has all the details.
Guy, it's interesting you're making that comparison to early 2020 because that is the market reaction we're seeing, even though we have been through this before. So the uncertainty around this new variant really showing. The S&P 500 at this point now down 2%. Last time I looked, the worst day since September. You can see the Russell 2000, that small cap index, down even more, down 4%. The last time I looked is probably even further, goes back further at this point, May of 2021. And then the transports down 3.9%, the worst day since 2020. The FTSE 100, the worst day since September or June of 2020, depending on the degree that it is down. Right now, I think probably September. Any way you slice and dice this, there's lots of pain. Stock sellers are out in force. If we go into the Bloomberg terminal, we're going to see that this means the Russell 2000 back below that 200-day moving average. One saying is the first time that it does that test, you want to buy it, but the second, third, fourth, fifth time, that is a sell the index sort of news. Let's see whether or not that proves true, but it does look a little bit ominous, as does this huge selling in the commodity space. Take a look at oil, the worst day in quite some time, copper down, lumber down, and then not surprisingly, if we take a look at the havens, we're going to see a big bid for the likes of gold, for bonds, and then take a look at the yen, Kaylee. This is the strongest day for that haven yen going back to March of 2020. Bitcoin down. Investors want out of risk assets and they want into safety. Yeah, multiple standard deviation move for the yen. And 13.5 basis points in on the 10-year yield. It's quite a day. Abigail Doolittle, thank you so much. So let's get more on these markets. Joining us now is Julie Beal, Kane Anderson Rudnick Portfolio Manager. Julie, there's a lot we still don't know about this new variant, and yet the market seems to have made up its mind that it is very, very bad news. Is this being overdone?
Well, I think it's hard to say, right, because we don't have a lot of data, and it's very possible that if this is a really severe variant and it starts to be able to evade vaccines, that this actually sets us back quite a bit. And what I worry about a lot is how structural will the changes be that impact the market? Do we have a situation where, dual income families suddenly switch to single income families because, a parent wants to stay at home? That has a ripple impact on the economy. So I think it's important to keep in mind what is going to be temporary and what's going to be more structural.
On the flip side of that, if we do see weakness in the economy, the Fed's going to step back from any tapering. The Fed is going to continue to deliver huge amounts of liquidity into the system. The taper is going to be maybe elongated rather than truncated. Julie, can you kind of offset those two forces for me?
Well, I think at the end of the day, every one of us would prefer to have a strong economy rather than one that's simply supported by the Fed. We've really entered into completely unprecedented waters here. To call it just an experiment is like calling, having your parents over and giving them an edible during Thanksgiving, to keep things calm. That's an experiment, right? I'm in California, so I can say that. But I think we've never been in a situation like this, frankly, where we have so much liquidity, interest rates are so low. If we go back to 07, 08, 09, we had a huge housing crisis that was just based on low interest rates. So I think it's more important to think about the fundamentals because those are what drive long term. Right now, valuations for sure are very impacted by interest rates. But I think all of us would just prefer to have a solid, strong economy rather than one propped up by the Fed.
Well, Julie, as you say, there's been a lot of liquidity. It's been very abundant, but the tap's starting to turn off. And you actually had Jan Hatzius over at Goldman Sachs publishing yesterday saying he expects the Fed to basically double the speed at which it performs the taper. Do you think that acceleration of tightening may be a mistake?
Well, it's hard, right? Because we don't know how the liquidity is going to really play out through. If you think about the rally and the amount of liquidity that we have, I think it's no secret that valuations are very high. And so there is a certain amount of cynicism around this rally, right? People want to be in the market and want to be on risk assets in case the recovery is stronger than expected. But then the minute there's a whiff of, danger ahead, we get a reaction like today where everyone pulls out. And so I think that's a reflection of the psychology of the market where people feel they have to be invested on risk assets, but are very quick to pull out.
Will they be as quick to go back in? I've been in the office for many hours now watching Kaylee Lines on television, and the people that she's been talking to have generally sounded really positive. This is an opportunity. This is Black Friday. Normally I'd be shopping for stuff. I'm shopping for stocks today. This is something I want to step into rather than out of. Julie, what do you make of that reaction? Because it seems to be pretty universal, judging by the people that have come on our air today.
I think it's a reflection of the fact that everyone has seen lots of businesses that they want to buy, but they feel the valuations are too high. And so this is the kind of opportunity that they've been hoping for. And I think that makes sense if you're trading in and out of stocks. But, for us, we're long-term investors and our time horizon is 5 years, typically. So for us, this is maybe an opportunity for some quality names that may have been a little bit overvalued. Maybe we have an opportunity there, but it just generally depends on what your time horizon is.
Julie, as we speak, the 10-year yield has now dropped sub 150. We're at 1.495%. That is the lowest since November 10th. Where's your hedge? Is it bonds or is it something else?
Well, hedges are sophisticated things that I know nothing about as a long-only manager. But I think the best.
But what do you
hedge,
put in a portfolio to get a little bit more safety?
I think to get a little bit more safety, you get into businesses that can do well, even if there is a more challenging variant or if the economy recovers. Like a good one I would think of is an off-price retailer named Ollie's Bargain Outlets, which has actually been under some pressure because people are worried about the supply of closeout merchandise. But the fact is that having this much dislocation in the supply chain is a beneficial thing for them long term. And the extra benefit to them is that if there are shutdowns, because they're general merchandise, they'll stay open. So businesses like that have kind of upside and downside potential, those are the ones we're really looking for.
Julie, we're going to leave it there. Really appreciate your time this Friday. Really useful advice, not only on what's happening with the markets, but also on parental management. Julie Beale of Kane, Anderson, Rudnick. Thank you very much indeed. We're also getting a move in the gilts as well. The gilts extending their gains. The UK 10-year yield sliding by 16 basis points. We are now at spot 81 in terms of the percentage position on a UK gilt. I'm just checking that number, making sure my eyesight's correct. Okay, we're going to take a look at how ETFs are performing on this risk-off session. Jets, the airline fund, certainly under pressure today, unsurprisingly. We'll dig into the details next. This is Bloomberg. Not only is it Black Friday, but on this show, it is ETF Friday. Markets certainly in risk-off mode as this new COVID variant emerges. What does that mean for the ETFs? Dave Wilson looking at some that are certainly seeing an impact today.
Means a lot of losses. Let's start there, especially in some of the more specialized exchange-traded funds. Before the break, Guy, you mentioned the U.S. Global Jets ETF. Largely airlines, but also some aerospace companies taking quite the hit today, down more than 9%. Energy stocks going down, and oil services, an example of the Holders Trust, an ETF an ETF that's getting hit. Regional banks, along with the larger ones, interest rates coming down, not good for their bottom lines. Metals and mining going the way of energy, and so it's reflected in that Street Tracks ETF. And, beyond that, though, what's interesting is if you look at sort of the work from home stocks as a group, their ETF is down. And that's largely a function of the likes of Amazon and Alibaba, though you have some pretty substantial gains in, Zoom Video, the exercise bike company Peloton, and so on. And then you look at Arc Innovation, Cathie Wood's flagship fund, it's actually little change today. And that is, as much as anything, a function of the fact that, yields have been coming down, and that's good for a lot of the companies that the fund owns.
Indeed. Bloomberg's Dave Wilson, thank you so much. And coming up, it might be hard to remember if you're following this market, but today is Black Friday. We'll talk to Douglas Baldassare, Charge It Spot founder and CEO. This is Bloomberg. We're an hour into the U.S. trading day, and it is not looking pretty. Abigail Doolittle is watching those markets. Abigail.
It is looking pretty ugly indeed, Kelly. Let's take a look at what's going on here. And you can see lots of red on this screen. And Guy earlier was making the point that it feels a little bit like early 2020. It looks a lot like early 2020, especially in the fact that you have some of the riskier, growthier, the more tell indexes and commodities selling off. The Russell 2000, the Dow Jones Transports, both down about 4%, the worst day since various times in 2020. New York crude down 9.2%. 2%. It just keeps going down. The worst day since April of 2020, the lowest in September. And then take a look at copper. Dr. Copper telling the economy also sharply lower, down 3.6%. Now, in early 2020, you had continued selling in all of these markets, but not so much for the S&P 500 as it made all-time highs. Well, the S&P 500 right now down about 2%, and we can see it is quickly moving down toward that 50-day moving average on a sloping RSI. When that's happened in the past, it typically means that the S&P 500 has hit that 50-day moving average, and in one case earlier this year, not so long ago, below the 50-day moving average. Not so long ago, we were looking at that Russell 2000 on its 200-day moving average, so brutal selling. As for that selling, not surprising with the transports down so much, it has to do with the airlines, the cruise lines, travel, Marriott also down sharply on the idea with this new COVID variant, the uncertainty around it. What will it mean? Will there be lockdowns? And even if there aren't, will folks be more reluctant to travel? Brutal selling. On the flip side of this, of course, we do have stay-at-home stocks higher, but we also have havens higher. Take a look at gold, up about 0.9% off of its highs. The 10-year yield, though, coming in 12 basis points, so a big bid for bond. The haven yen, it's really extraordinary, climbing by 1.6%, the best day since March of 2020 as Bitcoin falls. Folks are out of risk assets. They're into havens on the uncertainty around this new COVID variant and what could it mean for the global economy.
Absolutely. I don't think anybody was expecting this. I think a lot of people were expecting, Abigail, to be doing shopping of a different kind today. They're not buying into havens. They'd be out buying whatever was on offer for Black Friday. That's what we all thought we were going to be talking about today. We had loads of fantastic guests lined up. Some of them made it today. One of them that is going to make it next is going to tell us a lot about what is happening kind of right now. Crunch time in the United States. Retailers certainly watching very carefully. Masses of shoppers hopefully returning in person to shopping for Black Friday. But the new virus variant just adding to a long list of concerns facing the retail industry. For more now, let's bring in Ritika Gupta to give us an exact update on what is going on.
Yeah, Guy, well, we did actually get some data from the US and Europe actually showing that foot traffic in physical stores has actually picked up from a year ago. But maybe this new COVID strain could put some of that into disarray. But talking about today and Black Friday, well, you're not going to see those typical deals that you might be used to. And Adobe is saying that even going into this Black holiday shopping period, we're really seeing a lot shallower bargains in some of your main categories: appliances, electronics, sports goods, and some categories like tools and DIY, for instance, you're actually going to get no bargains altogether. They're actually more expensive. And this is coming at a time when consumer demand in the US, well, it is sky high. And Adobe are actually expecting online sales between $5.1 to $5.4 billion. So that is actually a record. Now, if you combine this, it's really strong, healthy demand picture in the US with some of those supply side constraints, low inventory, and the inflation, spiraling costs that retailers are facing, it really gives them, in a way, a once-in-a-lifetime opportunity to actually forego some of those promotions. So this is a strategy that these industries really betting on here, that they can forego these promotions and offset inflation without impacting consumer demand at all. So they're really trying to protect their margins here. So this strategy, well, it may work for this year, but 2022, that looks a little bit more cloudy. Will that inflation eat up into consumer discretionary spending? And of course, now with this variant as well, that could put this into disarray as well.
So many issues to consider. Bloomberg's Ritika Gupta, thank you so much. And joining us now for more on retail is Douglas Baldassare, Charge It Spot founder and CEO. Charge It Spot is a leading provider of phone charging stations for retailers and brands, and it uses real-time data on shopping. So, Douglas, it's Black Friday. In theory, that's a very hyped shopping day. Are people actually going to the stores today, or have they already been going for the better part of the last month?
Well, actually, what we've seen is that consumers are not as concerned as we may have thought about the supply chain challenges. Actually, 62% of people are not shopping any earlier than they otherwise would have. And only 10% are extremely concerned that they're not going to get what they need.
What are they buying?
Actually, this year, the number one category is clothing. We see a big spike in apparel sales right now. And in the past, what we saw was gift cards was the most popular gifting category. The way we kind of think about this is a return to traditional gifting, to more emotional connections, buying things that matter for people. And also, people are getting back out there. They've been cooped up. They've maybe changed sizes. They need new clothes. They want to attend social events. And we see clothing to be the big winner this year. And except for the under 21 category, they really still flock to electronics.
Well, Douglas, speaking of getting back out there, what's traffic looking like this year relative to the last holiday shopping season?
We've seen a steady increase back to brick and mortar. Interestingly, those who are most concerned about supply chain challenges are shopping predominantly in stores. Those who say, hey, I really don't care, I don't think this is going to matter much, they're shopping online, they're clicking and they're waiting for something to show up. But we've seen a steady increase back to brick and mortar to have some of those in-person experiences that we've been missing.
Douglas, do you think that's because delivery times have started to go up? Either the times are going up or you're being charged for delivery in the way that you weren't before, as a result of which maybe you just want to go to the store, get whatever it is you're looking for, secure it there and then, and take it home?
That is what we're seeing. I think that people are willing to pay for the convenience. We've gotten much more conditioned to buying online and waiting for things to arrive. I think especially when you see the market drop today, you're going to have more deal hunters out there. So I wouldn't be surprised if today, Black Friday, ends up being a bigger shopping day than it otherwise would have if it wasn't for this market turmoil that we're seeing today.
You mentioned that clothing is becoming a popular gift. Is that the category of retailer that is seeing the most in-store traffic?
Yes. People still want to try on clothing. They want the experience of browsing. It's not as planned a shopping purchase. You go in looking for clothes, not for a specific item as you might be online. And so you want that discovery. You also don't want the hassle of returning items that don't fit. And so apparel retail, we think this year will see a big boost.
Are consumers feeling positive? We've seen quite a lot of evidence recently, contradictory evidence, that consumers are worried. They're looking at what is happening at the gas station, they see prices going up. They're looking at what is happening at the grocery store, they see prices going up. That takes more disposable income and also kind of weighs on sentiment. Are you seeing any evidence of that in your data?
Well, we actually do track the holiday cheer index. This year, it's actually up 21% compared to 2019 when we last ran the study. Cheer is up, and it tends to continue to rise as we get closer to the holiday. Interestingly, cheer is highest among those who've already completed their holiday shopping and lowest among those who haven't yet started. So there is that concept of retail therapy that we've heard about. Perhaps what we're seeing is that when you do complete your shopping, you get into that cheery mode, or it could be that causation correlation issue where those who are naturally more cheery are getting their shopping done early. But on the holiday cheer factor, people are happy it's the season, and we're seeing that with returns to brick and mortar and increased shopping.
Douglas, really appreciate your time and your input and your data. Thank you very much indeed. Douglas Baldassare, Charge It Spot founder and CEO. I'm looking at the GMM on my screen in front of me, Kaylee. The numbers are just breathtaking. Equities continue to fall and fall fairly aggressively. The latest move, though, coming in crude, you've got Brent down by 8.9%, TI down by circa 10%.
Yeah, breaking below that $70 a barrel level at one point earlier on. Brent breaking below $75 a barrel. And this is on pretty sizable volume, Guy. That is what is so interesting about this session. Usually the day after Thanksgiving is thinly traded. Liquidity is an issue. Here, it doesn't seem like that's the case. It seems like people are actually trading all around these virus headlines.
I wonder whether the pandemic has made that possible, so you can still do this from home rather than having to charge into the office. So people have got their setup to be able to allow them to do that. And it's a shortened session as well. So if you're going to react, you've got to get in early and react. You've seen what's happened in Asia. You've seen what's happened in Europe. You can look at the futures and figure out what's going to happen in the States. So get in, make your move. But I think people, you don't have to go to the trading floor anymore to be able to be engaged with this. It'd be interesting to see how much retail participation there is here too.
Yeah, what's interesting to me is why today? You've had Austria going into lockdown, restrictions being put back into place across Europe for weeks now, and yet the equity market has held in there, and something flipped in today's session, and I just wonder why that is. And you've seen a repricing of central bank expectations, everything we've seen over the past several weeks going the complete other direction. Because
the market's been reacting to every cycle in a less aggressive way. And with Delta, we kind of knew what we were getting. We knew that it was going to be coming back, but there was a sense that it was manageable and you could look through it. The market has been continuously looking through so much of this stuff. With this, we just don't know. Yeah. And that's the problem.
Yeah, so we'll talk more about what we do and do not know. Coming up, we're going to speak about the new variant that is concerning investors. David Nabarro, special envoy on COVID-19 for the World Health Organization, will join us next. This is Bloomberg.
This is Bloomberg Markets. I'm Ritika Gupta, and you're looking at a live shot of the principal room. Coming up, Kate Nichols, the UK hospitality CEO, 11:30 a.m. in New York, 4:30 p.m. in London. This is Bloomberg. Let's check in on the Bloomberg First Word News. I'm Ritika Gupta. Shares of Didi Global fell in early trading after Chinese regulators were said to have asked the ride-hailing giant to delist from U.S. exchanges. Bloomberg has learned regulators have asked the company's top management to remove the firm from the New York Stock Exchange on worries over security. Sources tell Bloomberg privatization or a Hong Kong share float are both under consideration. Iran's foreign minister says the nuclear deal can be revived quickly if all parties return to their obligations and sanctions on Iran are removed. The official told the European Union today Iran will attend talks next week in Vienna, quote, in good faith, but needs guarantees that the United States won't exit the agreement. More data is needed about the new COVID-19 variant before the U.S. can determine whether to halt flights from southern African countries. That's according to Dr. Anthony Fauci, the chief medical advisor to President Biden. Dr. Fauci tells CNN there is evidence the new variant with the mutations that are, quote, raising some concern is already present in the United States. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg, Guy.
Ritika, thank you very much indeed. Let's carry on with that conversation. The new variant of COVID causing considerable concern and market gyrations. Let's bring in Dr. David Nabarro, Special Envoy on COVID-19 for the WHO, the World Health Organization. David, we are looking at a set of financial markets that are brutal. We've got oil down really aggressively. Stock markets are falling. Financial markets don't like uncertainty. They don't know what they're dealing with when it comes to this new variant. Can you help us? What do we know? What do we need to know?
Well, first of all, I have to stress to everybody, viruses change. They don't stay static over the months and years. This virus, we know, is capable of undergoing mutations, and combinations of particular mutations can lead to the virus changing. There are three changes we worry about. Does it become fiercer? Does it become more easily transmitted? And does it become better at evading the protection from vaccines? The reason why we're really very concerned about this new variant is that it seems to be able potentially to do all three of those. We just don't know for sure. The uncertainty will go on for 4 weeks, but I can quite understand why financial markets are worried, because the economic recovery we've seen in recent months has been marvelous, but it has been based on an anticipation that the world will be able to keep ahead of this virus. It looks as though the virus has crept up on us a bit the last few days.
Dr. Nabarro, what does that mean if there's now variants in circulation that may be able to evade vaccines? Does that make the vaccination effort entirely futile?
It's not entirely futile, to use your words. I want to stress that in the world of vaccines, you tend to get a reduction in protection, but you don't move to a point where the vaccine becomes completely futile, as you said. So it'll be just a reduction. If it is going to happen, it'll make life more difficult, and it will mean that some re-engineering of the vaccine will be necessary. But we were anticipating this, you know. It's not as come as a complete surprise. And I think what we have to say to everybody is we've shown in the last 2 years that science is capable of putting up a good fight against this virus. And it will just be a case of going back to the drawing board and re-engineering the vaccines. It's doable. It will create a bit of a hiatus, but people absolutely should not imagine that all is lost. It's not.
Well, that's positive. Dr. Nabarro, it's likely, from what I've read this morning, that this new strain came from an immunocompromised patient, possibly an HIV patient, because the virus sticks around in their system for longer, and as a result of which has the opportunity to mutate in the way that we've seen here. What do we need to do about this? How do we stop this happening? South Africa in particular has huge numbers of HIV patients. What do we need to do as a planet, as a world, to help and make sure that this doesn't occur again?
Thank you for the way you asked that question. What do we need to do about this as a world? The answer is simple. Would leaders of every major nation stop dealing with this as though it's an issue just for their nation? It's not. It's a world issue, and it needs a world response. And the most important requirement now is to get the wonderful vaccines that we have right now more fairly distributed across the world. Why is it that there are so few people in Africa who've been able to be vaccinated, whilst there are people being offered boosters and, in fact, being really pushed to get boosters in Europe and in the US? It's just wrong, and it's not the right way to deal with the global threat. So I want to quote you. Yes, we need a global response, and we need it immediately.
Well, Dr. Nabarro, let's talk about a certain global response today, maybe a knee-jerk reaction for countries like the UK restricting flights from South Africa and its bordering countries. Is that an appropriate policy response, given what we know?
There's a real problem about what's happened. You know, the people in South Africa have done amazing work in the last few weeks to sequence this, and then to discover that there's a particular feature of this variant that makes it easier to detect on normal PCR testing. And they've told the rest of the world what's happening. They've been really open. And it's just really unfortunate on the other side that as soon as they tell everybody what's going on, there's a kind of knee-jerk reaction to stop flights. I'm most impressed that Dr. Fauci said today, and I understand this is quotation, that the United States needs to know more about what's happening with this virus variant before they will decide to stop flights coming from South Africa. I really want everybody to remember, you don't deal with a situation like this just by closing your borders. Very, very rarely are we able to hold back viruses through border closure. It's much better to work together and establish the best way to deal with it, using the World Health Organization and connecting with the authorities of the countries concerned.
Final quick question from me, Doctor, and a question from the audience as well. We seem to be creating this impression that vaccines are the be-all and end-all, that they will protect everybody. This looks like, though, it's going to be an ongoing process, a rolling process. And I come back to the HIV patients as well. Vaccines won't work as well on them, and as a result of which we are likely to see a repetition of what has just happened. How do we deal with that again as a planet and figure out that we need to, A, deal with what is happening in South Africa and provide some protection there, and B, educate people that this is going to be a longer drawn-out process? As you say, there was this expectation that we'd be done fairly soon.
Yeah, well, you are just so right on everything you say. This is a long, drawn-out issue. This pandemic is not going away anytime soon. You can't vaccinate your way out of a pandemic. That's a basic rule of life. You've got to also use measures that stop the pathogen, that's the virus in this case, from spreading. So number 3, everybody everywhere should be using well-fitting face masks at all times, especially when indoors. Everybody everywhere should maintain enough distance from others so they don't inhale the exhaled air of somebody else. Everyone everywhere needs to practice good hygiene. We need to do everything possible to avoid being in stuffy, poor air circulation places and running the risk of spreading the disease. Don't just rely on the vaccines alone. It's not enough.
All right, thank you so much for your valuable time today. That is Dr. David Nabarro, special envoy on COVID-19 for the WHO, giving us some answers as we look for them on this new variant found in South Africa. This is Bloomberg.
35 minutes to the European close. Anything associated with travel getting battered from the get-go this morning. Let me run you through some of the names. Airbus, the airframer, down by 11% right now. Sub 100 trading at 99. Carnival trading on both sides of the Atlantic. The cruise industry front and center, obviously, throughout this entire pandemic in terms of the pain that's been felt. That stock down by 14%. Then you come into the airline sector, and it's interesting, actually. It's definitely the long-haul carriers that are most exposed to this. We've already seen what has happened with South Africa. People are worried about some of the other routes closing down. We've only just reopened the North Atlantic. IAG, the owner of British Airways, the owner of Iberia, Aer Lingus, etc., down by 15% today, trading at 130. Travel stocks very much under pressure, but European stocks more broadly are down and down hard and on big volume. The close is next. This is Bloomberg.